It's no surprise that Michael Burry predicted the 2008 recession
At the speed with which we are watching this market deteriorate
and paved the way for GameStop's rise. The man has made millions in profits himself, often even billions, and now he says our next big crash will be coming soon, just like all of his other predictions before it were true. And not without some fancy investing. Should the predictions be accurate, the stock market and crypto market could crash drastically as up to 95%. In our video today, we'll be diving in why Michael Burry bets billions on the entire financial market's upcoming crash. Welcome to Financial Market TV. If you're new to the channel and enjoy content like this, hit that subscribe button and the notification bell. Also, please don't hesitate to share your comments down below and give this video a like. Let's get started. Michael Burry is a master of the stock market, and his predictions are always worth listening to. In fact, he's predicted so many times, and his track record for success has made him famous, especially in 2000 when it was starting up again after 9/11 had downside momentum going on there at one point early last decade. Burry is definitely not one to underestimate, since his silent asset management fund started in 2016 and had an average day return of 22%. The investment track record, 14%, are outstanding numbers for anyone to look at. Even if you have an opinion, large businesses and strong government officials do not want you to view what I am going to show you. In reality, shortly after the SEC came to see Michael Burry, his Twitter profile vanished. This prompted us to go through a large number of deleted tweets in order to uncover Burry's most shocking ever released statements. This former Wall Street trader isn't just predicting the fall of the stock market. He thinks that America will collapse, and as it does so, virtually every asset will be affected, including cryptocurrencies, gold stocks, real estate, bonds, and other items. Before we delve into why he believes every asset class will go bankrupt, there is one important matter to discuss. In the words of Burry, nearly everything in Burry's betting is connected to future inflation in the US dollar. The US government is inviting inflation with this MMT-tinged policies, brisk debt or GDP, M2 increases while retail sales, PMI stage 5 recovery, trillions, more stimulus, and reopening to boost demand as employee and supply chain costs skyrocket. #paradigm shift. Burry's entire argument revolves around the terrible effects of modern monetary theory, or MMT in short. In case you were wondering, MMT is a macroeconomic theory that claims that a government should borrow print money until unemployment rate decreases. MMT is currently led by the Fed, but there are some major concerns arising regarding this concept. The United States debt to GDP ratio is the highest it's ever been, and it's going up. Furthermore, as a proportion of GDP, USDA has already attained all-time highs. M2 Money, which is a tracker for all over money supply, has also broken all previous records in terms of volume and value. All of this money printing and borrowing is occurring while businesses are already recovering. We can see this in the US Purchasing Managers Index, or PMI. The PMI is an index that tracks whether or not companies are in good condition. In the past few months, the PMI exceeded pre-pandemic highs due to this result. The population is left to wonder why the US government continues to print more money out. Prices for consumer products are already increasing dramatically as supply chains fail to meet demand. Burry thinks that this occurrence is super similar to what the German market went through as hyperinflation took place in the early 1900s. He took a quote from an article saying that prices in Germany were steady in both businesses, but in both business, also the stock market, they were booming. The exchange rate of the mark against the dollar, other currencies actually went up in the market, surprisingly one time, and at the moment is the strongest currency worldwide. What's happening now is similar to that situation. The US dollar is the strongest currency in the world. Consumer prices are increasing further, but is still steady, as well as the booming stock market. The US dollar has been going up over the past as well. Side by side with the wealth are the pockets of poverty. Greater numbers of people remain on the outside of the easy money looking in, but unable to enter as crime rates skyrocketed, meaning that mainly the rich people in Germany were the only ones who had easy money investment access. So people in poverty started to turn to crime as a solution. These investments were easy for a reason. The article stated that almost any kind of business could make money. Business failures and bankruptcies became few. The boom was put to a halt as the normal processes of natural selection by which the non-essential and the ineffective otherwise would have been called. Speculation alone, while adding nothing to Germany's wealth, it turned out into one of its largest activities. The fever to hop on turning a quick mark affected nearly all classes. Everyone from the elevator operating up was playing the market. With such large retail and institutional investing activity, German brokers couldn't keep up with the trading paperwork. This led Boris, aka the Robin Hood of Germany, to occasionally close down to be able to work on the company's backlog. Like what's happening in the US now. Many assets are very speculative and have reached all-time highs. Burry thinks that we are now in the greatest speculative bubble in the world, of all things by 2 orders of magnitude. As soon as this speculative bubble is over, Burry thinks that insane repercussions will happen following the immense speculation in Germany, aka a huge collapse will occur. The article continued to explain that all the marks that existed in the world in the summer of 1922 wasn't worthy by November of 1923 to buy even a single newspaper or a ticket for a train ride. But majority of the legitimate loss in money wealth had been suffered much earlier, meaning following the speculative bubble, Germany's financial market collapsed. Despite this, German citizens didn't lose their money from it because it was already lost years ago from the speculation and inflation. They just weren't aware of it. Burry states that Germany's financial market experienced 8 years of gestation before it exploded. I know, this sounds terrifying, but there are ways that investors like you and me can be prepared for that inflation to happen. Make sure to invest in inflation-protected assets, including real estate, diamonds, gold commodities, and collector's items. Burry, however, believes that investing in these assets is a stubborn move. In February of 2021, he stated historically discharged was good places to be during significant but relatively modern inflation in a modern #inflation. Best assets might be somewhat different. In Venezuela, Argentina, Zimbabwe, etc., even farmland wasn't safe from confiscation or punitive taxation breweries, essentially telling us that in times of crisis, the government will try to control everyone's assets, including gold and Bitcoin. He states that in an inflationary crisis, governments will move to squash competitors in the currency arena. People may say that Bitcoin is decentralized so that the government won't be able to control it. But Burry has bigger problems with Bitcoin. He believes crypto has a lot of potential over the long term, but people have taken on way too much leverage in the sector. Due to that, Burry thinks that the crypto run is not really going to be sustainable due to the massive amount of leverage. A tiny dip in price can initiate a huge crash and spiral. That is due because when one crypto investor in margin loses money, they will get margin call, which lead prices that fall. And then in turn, other investors will not get margin call as well, leading prices to crash even further, leading more investors to get margin call. This downward spiral can continue until everyone is margin called, according to Burry. If you do not know how much leverage is involved in the run-up of crypto, you may not know enough. Interestingly, Burry believes that almost everything will be negatively impacted, stating that trends nowadays like Bitcoin, EVs, softwares are meme stocks. What Burry means is that almost all stocks, cryptocurrencies, commodities, gold, and real estate are doomed. Since everything is crashing, what do we invest in now? So there are 4 important concepts to understand inflation: capital costs, input costs, pricing power, and interest rates. These concepts might sound uninteresting on the surface, but they are essential to crushing the market. During an inflationary period of time, capital costs are one-time expenses that are used to create a product or service. Input costs are like recurring expenses used to manufacture a product. During an inflationary environment, the objective is investing in companies and maximizing capital costs to minimize input costs. Input costs also have an issue though, which is that prices have to constantly change. For example, an airline needs to check fuel prices continuously and repress airline tickets accordingly, which counts as a big issue during times of high inflation. The next factor to look for is pricing power, which is the business's ability to raise its prices. Warren Buffett sees this as the most important factor. It means that you've got the power to raise prices without losing the company to a competitor. Also, that you've got a very good business in hand. The last factor to watch for is the effect of interest rates. When the high inflation occurs, people who borrow often will have to constantly loan at incredibly high prices. Higher loan rates are devastating for borrowers due to the increased cost of capital. With those four concepts in mind, you can witness why Burry's investing in the stocks and options in this portfolio. To explain, put options are contracts betting that stocks will fall, whereas call options are contracts betting that a stock will rise. His largest position is in Tesla put options. Burry's Tesla put options cover over $731 million worth of Tesla, an increase of 34% from his prior quarter. However, he also owns put options covering over $280 million worth of the iShares 20-plus year Treasury bond ETFs, which is an increase of 53% from the previous quarter. He also has put options in the ARK, covers over $30 million worth at the fund. Burry also owns call options on a variety of stocks, the two biggest being Facebook and Google. His Facebook call options cover over $327 million worth as Facebook stock increased by 71%. Burry also has multiple investments in his options portfolio, which can be organized into three different components: inflation hedges, growth stocks, and the bond market. In Burry's inflation hedges, all the call options are on companies with little to no impact, with Facebook and Google as the largest call option because Facebook's users and Instagram and WhatsApp's users will never stop using these apps because of inflation. Who would stop using a free app? Due to this, Facebook always has pricing power with its advertisers and can raise prices that they want. When it comes to growth stocks, Burry bets on increasing interest rates because high interest rates hurts herd growth stocks, since the growing companies have to constantly borrow money. This can be seen in Burry's bet against Tesla. The last component of Burry's portfolio revolves around the bond market. Michael Burry believes that interest rates will increase, including bond yields as well. Treasury bonds are simply just loans from the government, meaning bond yields should increase when inflation increases. As the bond yields go up, bond prices must go down. He bets that bond prices will decrease by purchasing put options in the bond ETF and buying calls in an ETF that shorts bonds. In summary, Burry believes inflation is running its course, and should the prediction be real, we've got an interesting future lined ahead of us. Thanks for watching the whole video. Again, if you're new and like this type of content, subscribe to our channel. And don't forget to leave a comment down below and hit that like button. Also, click on the notification bell to get updated on our weekly uploads. See you in the next video.